Hello and welcome to Boni's Life, the channel where we dissect the most complex issues in the world of finance and bring you the unvarnished truth. Today, we're diving headfirst into a story that has all the hallmarks of a modern financial drama, the spectacular rise and even more spectacular fall of American Bitcoin Corp, a cryptocurrency venture with a name that commands attention and a story that demands scrutiny. What happens when the volatile world of crypto collides with one of America's most famous political families? Stay with me as we unpack the hype, the hope, and the ultimate heartbreak behind a company that promised to revolutionize Bitcoin mining, but instead became a cautionary tale for the ages. In September 2025, the mood was electric. Eric Trump, son of the US president, stood at the Nasdaq, ringing the opening bell to celebrate the public debut of American Bitcoin Corp. The company, which he co-founded, had just completed a reverse merger and was being hailed as a new giant in the Bitcoin mining industry. With a stock price that soared to over $9 per share, it seemed like another Midas touch from the Trump dynasty, promising a windfall of over $500 million. The company's CEO, Michael Ho, a man who started his crypto journey with mining rigs made from milk cartons, was now at the helm of what he called one of the largest miners in the world. They claimed to have a secret sauce, the ability to mine Bitcoin at half the market price, ensuring massive profits. But as we've seen time and time again in the world of high-stakes finance, what goes up can come down with breathtaking speed. And for American Bitcoin Corp, the descent was nothing short of catastrophic. Just 3 months after that triumphant bell-ringing ceremony, the dream had unraveled. By December 2025, American Bitcoin's stock had plummeted by a staggering 70%. With some reports suggesting an even steeper 80% drop from its peak. On one particularly brutal day, the stock lost over half its value in just 30 minutes of trading. So, what went so horribly wrong? The immediate trigger for this financial earthquake was the expiration of a share lockup period. This is a common practice in initial public offerings where early investors are restricted from selling their shares for a certain period. The idea is to prevent a sudden flood of selling that could destabilize the stock price. But in the case of American Bitcoin, the end of the lockup period was like opening a floodgate in the middle of a hurricane. Early investors, seeing the writing on the wall, rushed for the exits, dumping their shares and triggering a panic sell-off. But the lockup expiration was just the spark that lit the fuse. The entire crypto market was already in the throes of a brutal crypto winter. Prices were down across the board, and investor sentiment had turned decidedly bearish. This hostile environment was particularly toxic for any venture associated with the Trump brand, which had become a lightning rod for controversy. Other Trump-linked crypto assets, like the meme coins Dollar Trump and Dollar Melania, had already crashed and burned, losing over 90% of their value. As one analyst from Columbia University put it, basically anything related to Trump has done quite poorly. And that's not surprising because their operations are all on the highly speculative end of crypto. The Trump name, once a symbol of business acumen, had become a liability in the fickle world of cryptocurrency. Beyond the market turmoil and the Trump connection, a closer look at American Bitcoin's foundations reveals a series of troubling red flags. The company's leadership, particularly CEO Michael Ho, had a history that should have given any serious investor pause. While his journey from a luxury car dealer to a crypto CEO is certainly a compelling narrative, it's also a story riddled with legal battles and regulatory scrutiny. Ho had previously sued another crypto company, Mara Holdings, for a staggering $138 million in unpaid compensation, a case he eventually won. More concerningly, the company that would become American Bitcoin had financial backing from individuals who had settled with the SEC over allegations of illegal stock promotion and manipulative trading. And in 2020, the company itself had to pay a $1 million fine for failing to register a stock offering. These weren't just minor missteps, they were indicators of a corporate culture that was, at best, cavalier about regulations and at worst, deliberately operating in a legal gray area. The final nail in the coffin for American Bitcoin was a complete failure of corporate governance and transparency. Just as the stock was in free fall, the company announced that it would be unable to submit its quarterly financial results on time. The reason? Issues with timeliness and completeness. This is a massive red flag for investors, as it suggests that the company's internal accounting is in disarray. To make matters worse, it was then revealed that the company had fired its auditor, a move that often signals a deep and unresolvable disagreement over financial reporting. It later emerged that the company had been struggling for over 2 years to fix deficiencies in its accounting practices and had even received a failing grade under accounting standards. While Eric Trump and other executives were publicly proclaiming their unwavering confidence in the company's virtually unmatched fundamentals, the reality was that the company was a black box, with no credible financial information to support its lofty claims. So, what are the lessons we can draw from the dramatic collapse of American Bitcoin Corp? First and foremost, it's a stark reminder of the old adage: if it sounds too good to be true, it probably is. The promise of mining Bitcoin at half the market price was a seductive one, but it was a claim that was never substantiated with credible evidence. Second, it underscores the critical importance of due diligence. A cursory look at the company's leadership and their past legal troubles would have been enough to raise serious questions for any prudent investor. Third, it highlights the dangers of investing in hype and celebrity endorsements. The Trump name may have been enough to generate initial excitement, but it was no substitute for a solid business plan and a commitment to transparency. Finally, the story of American Bitcoin is a powerful argument for stronger regulation in the cryptocurrency space. The fact that a company with such a checkered past could go public and attract hundreds of millions of dollars in investment is a clear sign that the current regulatory framework is inadequate. The collapse of American Bitcoin Corp is more than just another story of a failed crypto venture. It's a microcosm of the excesses and dangers of the digital gold rush. It's a story of ambition, greed, and the illusion of easy money. And it's a story that should serve as a warning to anyone who's tempted to jump into the crypto market without a clear understanding of the risks involved. The world of cryptocurrency is a wild and unpredictable frontier, and for every success story, there are countless tales of fortunes lost and dreams shattered. The key to navigating this treacherous landscape is not to chase the hype, but to seek out knowledge, demand transparency, and always do your own research. That's all the time we have for today on Boni's Life. I hope this analysis has been both informative and thought-provoking. Join me next time as we continue to explore the forces that are shaping our world. Until then, stay informed, stay critical, and stay safe.